I would define the credit union difference as people helping people.
Credit unions were established on the philosophy of people helping people.
To help people through tough times, where people carry more.
It allows us the opportunity to help people. Our membership is what we're concerned about. Credit unions have the ability to go outside of the box, whereas other lenders don't. Our Next Step program we established about 5 or 6 years ago, and it was an opportunity to go outside of the standard conventional lending box that exists in the mortgage and lending world. We established this Next Step program and basically opened up that box to say, you know what, we realize that there's plenty good in those individuals and in their circumstances to give them a lending option that can help them and guide them going forward, and then maybe give them an opportunity to refinance into a more conventional, favorable program that might be out there.
Fees disproportionately impact low-income households. We also know that fees can often lead to account closures. In that case, individuals are unable to establish a banking relationship with any other financial institution. They are then using alternative ways to meet their banking needs, which ends up being more costly for our community members. The average cost of an overdraft fee is nearly $30 and has historically risen over time. A $30 charge should not turn into a $60 fee. Our credit union decided to reduce our overdraft fees because we realized it was the right thing to do. We know that people make mistakes in their finances, and as we move away from traditional banking practices, we want to create a more equitable banking environment and experience for our members.
Crises do not create character, they reveal it. We had to be bold and innovative. The staff and board recognized that the largest expense in most families' budget is their house payment. The principal reduction was not the biggest priority for members or the credit union, and that's how we came up with the 9-month interest-only loan program. When the pandemic hit, credit unions needed to be the light at the end of the tunnel. Members saved over an average of $300 a month and up to $1,000 a month by not having to pay principal on their house loan payment for 9 months.
My name is Chris. I've been a member of the credit union for over 30 years, and I have no intentions of changing that. I was still working when the program was offered, but I have been retired now for a year and a half. With the program, I was able to pay off some credit cards and other debts, and so now that I'm retired and living on a fixed income, that has really made a big difference for me.
We've had a lot of feedback from our members, a lot of God bless yous, a lot of tears, lots of stories on how this program helped their budget and helped them through a really tough time here.
The impact for our members and our membership has been outstanding. We have, over the course of the last 5 years, been able to execute, just on the mortgage side, over 250 of these transactions for individuals, families, whatever the circumstance may be. You know, helping those 250 individuals and or families is helping their lives in our community, which goes a long way across the broad spectrum of what the community is and what our credit union is here for.
Well, what I would like to share with our legislatures about credit unions is the personal care that I and my family have experienced, just being there for us. And easy to call up and talk to somebody personally, just have them understand what my needs are.